Hello, I'm Richard Barkham. I'm Group Research Director for the Grosvenor Group. We're a transnational real estate company with our origins in Mayfair and Belgravia in London. And as a long-term investor and fund manager, we've just completed a major piece of research on global city resilience. We wanted to go beyond the standard definitions of risk and return, such as standard deviation and vacancy rate and rental forecasts, and look at how cities would perform over the next 50 years or so. The best environment for real estate returns are cities that provide their citizens with a good standard of living and the opportunity to pursue cultural development. So we were looking at which cities would be resilient to the major shocks that are arising from climate change, globalization and population growth, and trying to form a ranking of 50 of the world's most important cities according to their resilience. Now, our measure of resilience is twofold, or it decomposes into two elements. First, there is vulnerability. And vulnerability of cities is due to climate change and events like sea level rise. It's due to environmental degradation, including such things as pollution. It's due to poor investment in infrastructure, leading to transport systems that won't function. It's due to community vulnerability. That has many aspects to it, but one of which is housing affordability. So those are the sorts of elements that go into our vulnerability measures. But cities are like people and societies. Not all of them have the same propensity to plan for the future and invest for the future and look forward. There are many vulnerable cities that can mitigate some of that vulnerability by adaptive capacity. And that is the second part of the resilience ranking. We had a look at all of the cities that we had assessed for vulnerability to look at their governance, their funding structures, their track record of delivery, their risk-based land management systems, and a whole range of factors that we think are associated with cities' ability to adapt themselves to changing global circumstances. And we think, just to go back, we think that the world's been relatively stable over the last 500 years or so, but planetary systems are changing much more rapidly now. And so we think this aspect of resilience is going to be key to how cities can evolve, develop, foster economic growth, look after their communities, and from our perspective as a real estate investor, generate sustainable rental growth and preserve real capital values into the long term. But I also have to say, I think if this was only about making money out of real estate, I would be a bit ashamed of the research. I mean, Grosvenor has certainly always taken its social responsibility seriously. And, I wonder if, my hope would be that, I believe that city authorities that don't take resiliency seriously don't put in place the systems and the infrastructure to cope with the shocks that are going to come increasingly unpredictably, increasingly of greater magnitude. Investors are probably going to start to avoid those cities and not deploy capital there. And I think, if we, in making this public and articulating this, can put pressure on city authorities to take resiliency more seriously in order to remain competitive in the global marketplace, and in the same way, because of that, make the lives of their citizens better, then nobody would be more delighted than myself and Grosvenor. At the end of the day, we've managed a large portion of central London, invested and developed in Mayfair and Belgravia for over 200 years. we know that real estate returns are intrinsically linked to the health and vibrancy of the underlying community. And so, our concept of resilience comes a little bit out of our experience of managing real estate for 200 years.